Some 20,000 people a day streamed through the pavilions and examined the scale models as they hunted for investment opportunities at Dubai's vast international exhibition center. The emirate, which is rich in ambition, if not oil, is currently experiencing a building boom like nothing seen anywhere else on Earth.
There's $1.3 trillion of real estate projects taking place here, and at Cityscape alone, we've seen over $100 billion worth of projects announced. So I think they're perfectly positioned to ride the storm that's taking place.
That's not to say this region will be immune to the impact of what's happening elsewhere.
There is going to be some effect of the lack of liquidity on a global scale, and as we're seeing here, a lot of the share prices are dropping from the Middle East real estate developers. However, the prices still remain very, very high.
The global worries may just be pushing even the richest of investors, like those from neighboring emirate Abu Dhabi, to be that much more discerning about the type of projects they put their funds into.
There's a lot of money that's still maintained here in the sovereign wealth funds, so I think there are positive signs. I think you'll see a return to fundamentals here. So the well-planned, well-executed, well-branded, well-positioned, well-located developments that you see coming through will continue that growth spurt.
That applies not only to projects in this region, but ones elsewhere that are keen to tap into Gulf liquidity. Among those projects attracting interest from here is Malaysia's huge new Iskandar Special Economic Zone in the southern tip of that country, right next to Singapore.
We are in that part of the world that still enjoys economic growth, enjoys as a destination of investment from different parts of the world, as well as a region which has its own resilience in terms of economic activities.
The biggest investor in the Iskandar zone to date is a consortium comprising Abu Dhabi's sovereign wealth fund Mubadala and Aldar Properties, Jordan-based Soraya Holdings, and Kuwait Finance House. They've committed an initial $1.2 billion, expected to swell to some $20 billion over the next few years, to build a residential, commercial, entertainment and financial center. That flagship development, called Medini, was officially launched at Cityscape. Soraya offshoot Millennium Development is set to build an international financial hub within the zone, just a few minutes from Singapore.
Malaysia, being an Islamic country, offers for the financial district a unique opportunity to be an Islamic financial centre on the doorstep of the fourth biggest financial centre in the world. I mean, it's a unique opportunity.
That's helped attract other major Gulf investors, such as the giant developer Damak, as well as Limitless, part of the Dubai World Group, to get involved in the Malaysian Special Economic Zone, which aims to attract some $100 billion in investment by 2025.
Iskandar Malaysia is almost like an uncut diamond. The value is already there, but it's like a hidden value and yet to be polished. And so there's a potential big upside for investors coming to Iskandar.
And it may be that the harsh lessons learned and measures taken after the Asian financial crisis of 1997-98 will help buffer much of Southeast Asia from the worst of the current financial mayhem.
The countries that have managed their liquidity and their credit markets over the last 5 years are going to emerge stronger.
The United Arab Emirates had itself looked to be pretty well immune from the liquidity crunch and global turmoil, until last week, when markets across this region also slumped badly. It may have injected a dose of necessary realism into Cityscape Dubai and made investors be that much more picky. But hopes here clearly remain high that this part of the Gulf is well set to boom for a long time to come.